What if I told you that one investor has beaten the market for decades, turned thousands of dollars into billions, and built one of the most successful investment records in history? His name is Warren Buffett. Whenever Warren Buffett buys a stock, investors around the world pay attention. Not because he predicts the future, but because he follows a simple philosophy: buy great businesses and hold them for a very long time. Today, we're looking at 3 stocks that Warren Buffett continues to believe in. These aren't flashy startup companies. They're not trendy AI stocks. They're businesses with strong brands, loyal customers, and powerful advantages that have allowed them to grow year after year. More importantly, we'll uncover exactly why Buffett loves these companies and what lessons every investor can learn from them. Let's begin. Before we discuss the stocks themselves, it's important to understand how Buffett thinks. Most investors focus on stock prices. Buffett focuses on businesses. When many people see a stock market chart, they see numbers moving up and down. Buffett sees factories, products, customers, profits, and management teams. He asks simple questions. Will this business still be strong 10 years from now? Does it have a competitive advantage? Does it generate consistent profits? Can management be trusted? And most importantly, would he be happy owning the entire business? This mindset is what separates Buffett from most investors. He doesn't chase hype. He doesn't panic during market crashes. He doesn't buy companies just because they're popular. Instead, he searches for outstanding businesses that can continue growing for decades. With that in mind, let's look at the first stock. Stock number 1, Apple. For many years, people thought Buffett avoided technology companies. Then came Apple. Today, Apple has become one of Buffett's most important investments. At first glance, this may seem surprising. After all, Apple makes technology products. But Buffett doesn't see Apple primarily as a technology company. He sees it as a consumer brand. Think about it. Millions of people around the world upgrade their iPhones every few years. They buy AirPods. They buy iPads. They buy MacBooks. They subscribe to Apple services. And once they enter Apple's ecosystem, many never leave. That's incredibly powerful. Imagine owning a business whose customers voluntarily return year after year. That's exactly what Apple has built. The company has created one of the strongest brands in human history. When customers trust a brand, they become less sensitive to price increases. That's why Apple can sell premium products while maintaining strong profit margins. But the real magic isn't just hardware. It's the ecosystem. A customer who owns an iPhone often buys other Apple products. Those products work together seamlessly. That creates convenience. And convenience creates loyalty. Loyal customers generate predictable revenue. Predictable revenue creates stable profits. Stable profits attract investors like Warren Buffett. Another reason Buffett likes Apple is its enormous cash flow. Every year, Apple generates massive amounts of cash. That cash can be used for research, acquisitions, dividends, and stock buybacks. Stock buybacks are particularly important. When a company buys back its own shares, existing shareholders own a larger percentage of the business. Buffett loves businesses that reward shareholders this way. Of course, Apple isn't perfect. Every investment has risks. The smartphone market is mature. Competition is intense. Global economic slowdowns can reduce consumer spending. Supply chain disruptions can impact production. But despite these challenges, Buffett continues to believe in Apple's long-term strength. Why? Because brands matter. Customer loyalty matters. And businesses with loyal customers often remain successful for very long periods of time. The lesson from Apple is simple. Great businesses don't just sell products. They create habits. And when a company becomes part of people's daily lives, it becomes extremely valuable. Now let's move to the second stock. Stock number 2, American Express. Many investors focus on technology. Others focus on healthcare. But Buffett has long been attracted to financial businesses. One of his favorite examples is American Express. Buffett has owned American Express for decades. Think about that, decades. While investors constantly jump from one opportunity to another, Buffett has stayed committed to this company. Why? The answer begins with trust. Money is built on trust. Financial systems are built on trust. Credit cards are built on trust. American Express has spent generations building that trust. Its brand is recognized around the world. Many customers view an American Express card as more than a payment method. They view it as a status symbol. That's powerful. Strong brands allow companies to attract loyal customers. Loyal customers spend more. Higher spending creates more revenue. More revenue creates more profits. American Express also benefits from a unique business model. Every time customers use their cards, the company earns fees. This creates recurring revenue, and recurring revenue is something Buffett loves. The company also attracts many high-income consumers. These customers often spend significantly more than average cardholders. That spending generates even more revenue for the company. But there's another reason Buffett likes American Express. Competitive advantages. Many businesses can be copied. Strong brands cannot. Building customer trust takes years, sometimes decades. That creates a barrier for competitors. Even if another company enters the market, it cannot instantly recreate a trusted global brand. That's exactly the kind of moat Buffett seeks. A moat is a competitive advantage that protects a business from rivals. The wider the moat, the stronger the business. American Express has spent decades widening its moat. Of course, risks still exist. Economic recessions can reduce spending. Consumer debt concerns can affect financial companies. Competition remains intense, but Buffett believes the company's strengths outweigh those risks. The lesson from American Express is clear. A trusted brand can become one of the most valuable assets a company owns. Trust creates loyalty. Loyalty creates revenue. Revenue creates wealth. Now let's discuss the third stock. Stock number 3, Coca-Cola. If there's one investment that perfectly represents Buffett's style, it's Coca-Cola. This is one of the most famous investments in financial history. Many investors ignore simple businesses. They search for exciting opportunities, complex technologies, revolutionary products, the next big thing. Buffett often does the opposite. He asks a simple question. Will people still use this product 10 years from now? 20 years from now? 30 years from now? For Coca-Cola, the answer has historically been yes. The company sells products in countries around the world. Its brand is recognized almost everywhere. People of different cultures, languages, and backgrounds know the Coca-Cola name. That's extraordinary. Brand recognition on that scale is incredibly difficult to build. But Coca-Cola's strength isn't only its brand. It's also its distribution network. The company has spent decades creating relationships with retailers, restaurants, and distributors. Its products are available in countless locations. That availability creates convenience. Convenience drives sales. Sales drive profits. Profits drive shareholder returns. Another reason Buffett likes Coca-Cola is consistency. Many businesses experience dramatic ups and downs. Coca-Cola has historically demonstrated remarkable stability. People continue buying beverages during good times and bad times. This doesn't make the company immune to challenges. Consumer preferences evolve. Health trends change. Competition exists. But Coca-Cola has repeatedly adapted while maintaining its global presence. Buffett appreciates businesses that can survive changing environments. He doesn't need perfection. He needs durability. And Coca-Cola has demonstrated durability for generations. The lesson here is powerful. A business doesn't need to be complicated to be successful. Sometimes the best investments are simple companies with strong brands, global reach, and loyal customers. What these three stocks have in common. Now let's step back and look at the bigger picture. Apple, American Express, Coca-Cola, different industries, different products, different customers. Yet Buffett loves all three. Why? Because they share common characteristics. First, strong brands. People trust these companies. Trust creates loyalty. Second, competitive advantages. These businesses have strengths that competitors struggle to copy. Third, consistent profitability. They generate cash year after year. Fourth, customer loyalty. Customers return repeatedly. Fifth, long-term durability. Buffett believes these businesses can remain successful far into the future. Notice something interesting. None of these characteristics depend on predicting the future. Buffett isn't trying to guess tomorrow's headlines. He's evaluating business quality. That's why his strategy has remained effective for decades. While trends come and go, great businesses continue operating. And that's where long-term wealth is often created. Final thoughts. When people study Warren Buffett, they often focus on the stocks he buys. But that's only part of the story. The real lesson isn't copying his portfolio. The real lesson is understanding his mindset. Buffett searches for businesses with strong brands, strong management, competitive advantages, loyal customers, consistent profits, and long-term potential. Whether it's Apple, American Express, or Coca-Cola, the underlying principles remain the same. He buys quality, he thinks long-term, and he remains patient. In a world obsessed with quick profits, patience has become a competitive advantage. That's why Buffett's approach continues to inspire investors around the globe. Because investing isn't about getting rich overnight. It's about making smart decisions consistently over long periods of time. And few people have demonstrated that better than Warren Buffett. Thank you for watching. If you enjoyed this video, be sure to subscribe, and we'll see you in the next one.